Good evening everyone and welcome back to Finance Lingo. In this video I'll be talking about this stock known as ISEC Healthcare. So let's begin with the disclaimer. This presentation is provided to you for general information only and does not constitute a recommendation, and offer, or solicitation to subscribe for or purchase or sell investment product mentioned herein. Okay, so let's get started off. So basically what we are looking at is this stock known as ISEC, ISEC. Recently it just have an ex-dividend. I must first declare to you that I do have a 20,000 shares on this, so I'm just buying it for some long term. Okay, so more for keeping the shares rather than trading the shares. Okay, so as a start, we are going to look at the market depth. This is the market depth. So there are some sellers at this 0.33 range and some big buyers at this 0.31 range. 0.31 range. All in all, this is a rather illiquid stock. What you can see here is that there's not much volume traded. So okay, so this should not form as a big component of anyone's portfolio. So, but nonetheless, this is a pretty interesting stock which I'm looking at right now. So let's go on. So let's see the stock analytics of this ISEC company. This is ISEC Healthcare. So what we are looking at, okay, I'm just going to enlarge a little bit. Okay, this is the company's, the dividends based on the what the standard workouts is come to about 4% per annum. Right, the P ratio is about 23. So okay, and based on the financials earnings is per annum, the company was IPO in the year 2014. Okay, so after that the company do enjoy some pretty good growth, and you can see there's some pretty good increase in net profit as well. And going as we go on, all right, the company does not have any long-term debt. That's pretty good and very solid. And the accounting book value of the firm during the IPO have went up, and thereafter it has continued to rise. So this is pretty good things to take note. At the same time, the company has begun to reward shareholders, which is very welcoming. So you guys can read through what the company does. They deal more with LASIK and eyes on the eyes healthcare kind of thingy, medical eye care service provider. Alright, so next we just proceed on to the stock charts. So as well, we can see this is the stock charts. Just let me enlarge a little bit. This is the stock chart of ISEC. As well, I see during the IPO in 2014, the share price did rally. Thereafter, it just come crashing down. I do not know what's the reason why, but I think it's just overhyped. Alright, overactive on these stocks due to because it's healthcare nature, and thereafter people lack of the holding power and they start disposing of the shares, and thereafter the share price did start to bounce against these regions. I can see that there's a support line over here, and there's a resistance line at the top of this invincible range. So I do see that the share price is going to forecast. I do forecast it's going to continue to go within this range bound and continue to incline upwards. Nonetheless, this is just what I can forecast. Okay, it's not guarantee on that. So this is a very good sign. I like this kind of charts. Actually, it has a big crash over here and rebounds day after with very good strong supports. So next, we'll proceed on with the rest. So this is Pump 2, where I bought these shares. Next, alright, so this is the annual reports of ISEC. You can go to the company websites and download the 2016 annual reports. Alright, so what we're gonna see is the board of directors. Okay, this is their revenue statement and the profit they make for 2016. So you can see through here who is the board of directors. Okay, the non-executive chairman Mr. Sito E. Ping, and executive chairman Lee Hong Ming, Dr. Won Jun Sion. Alright, nonetheless, it's pretty detailed of what they do and where they graduate from. I'm just going to go to the more interesting point here. Alright, so what we can see here is well, a lot of them is doctors. So, but I'm just going to sum up because there's 100 of pages. I'm just not going to read through everything. I'm just going to sum up. So, main thing what I did was I have already summarized up for you guys. We are going to jump straight to page 87. So let's go to page 87. Okay, 86 and 87. Okay, so this is page 86, the shareholding statistics of this company. So you guys can read through it and look for the names. Nonetheless, I've summarized it for you, so you guys do not need to do the extensive homework. So as what we can see is that the bulk several of the independent directors and the chairmen and CEO is shareholders of the company, especially Mr. Lee Huang Ming, Executive Vice Chairman. He is holding 16.17% of the company, which is pretty large. Alright, so apart from that, a lot of major shareholders, as you can see through the names, is okay, they're shown over here. For example, Mr. Fang Seng Kong and Mr. Lim Chok Ping. Okay, Mr. Chan or Cordelia. Okay, you can see that they have a substantial holdings on these companies. So okay, so I can see that I just did a pretty decent summary, and I think half of them is over here is all doctors, and they easily hold around maybe 40% or somewhere around there, or 50% of this company. Okay, so this is a company which is largely owned by doctors. So at the page 87, they do give you some brief of this shareholding statistics of the majors, few the largest shareholders, and some of them whom are independent directors of the company. So what I have did here is to give you a very good summary, so you don't need to go through them. So I can see that you can see that all of them are a lot of the doctors over here and consultant in eye surgeon, etc. Some of them is doctors at Mount Elizabeth clinics, etc. So I can see that a lot of them are shareholders themselves, and they do want to reward themselves. So now we go to the dividend policy of this company. I don't remember reading through the formal dividend policies by this company, but nonetheless, from the history, they have been rewarding the shareholders pretty well, a short history. So what I'm going to show you here is the page 3 of this annual report to this paragraph. Okay, so what I can see is that this company has a very good payout ratio of 75 last year based on financial year 2016, and with the shareholding statistics, okay, of such good distributions, I believe that this company still like to continue to reward the shareholders, because the doctors themselves and is the shareholders themselves. So it's pretty interesting that very likely that they're going to reward themselves as well. So yeah, this is very good payout ratios of this company. At the same time, I'm just going to show you the dividend history of this company. Just let me go to the SGX websites. Let me see. Okay, so this is the SGX websites. Okay, just go to company information, corporate actions. Okay, look for ISEC Healthcare. Okay, I'm just going to enlarge a little bit. Click go. Here you have, this is ISEC Healthcare. They have started rewarding shareholders since May 2015 with dividends, and we do see an increasing dividends trend, paying more to shareholders. But nonetheless, okay, I need to reiterate that this is a pretty small company. So let me show it to you. This is a pretty small cap company. It's 160 million. Okay, based on the share price, and the PE ratio we are talking about is 23. Pretty decent for medical stocks. Okay, comparing to Q&M or this, I think Parkway REITs, etc. Their PE ratio is pretty high as well. So I think this is pretty decent PE ratios. One thing I like is the net profit margin is very good. Alright, so now apart from that, I'm just going to go to this, I think one of the most important things of this video. Okay, so what I did was I extracted the entire Thomson Reuters data. Okay, I'm going to paste it to the Excel sheets. Okay, this is based on the last 5 years of financial announcement made by them. So okay, so all this on the left column here is all just copy and paste from Thomson Reuters. So what I derive here from this here is that the revenue growth, okay, revenue growth here, okay, we do see a gentle declining ever since they do IPO. Is pretty normal, it's very common. As a company get larger, it's a little bit more difficult to manage. So the net profit margin, gross profit margin was pretty healthy. Apart from that, the net profit margin was pretty good this year and last year as well. So from then on, I actually work out the mean, median, max, and average of the net profit margin over the past 5 years. So from then I derived that the medium net profit margin was reported in 2014. The medium is 12.19% and the maximum was 20.9%. And the average of the net profit margin is 13.5%. So nonetheless, based on the half year reported recently, 2017, the company is still achieving on the max side of net profit margin. So this is a very good news. Okay. But I'm going to show you where it is later. I think later on. So I think I'm just going to show you now instead. Just let me get the SGX. Okay, so to do that, just go to company information. Okay, click the ISEC. Select the maybe past 3 months, past 6 months. Okay, so this is the half yearly results reported on 8th of August. So you can just click on that. So this was the half yearly earnings report made by ISEC. So the revenue was this much and the net profit was this much. All in all, when 3.6 divided by 17, I think we can really come out to a very good profit margins. Let me just work it out. So what we are looking at here is 3.6 million divided by 17.7 is about 20% net profit margin, okay, for a half year. So if you are to estimate the full year earnings, you're probably looking at 7 million for the year. So we are still achieving, the company is still presently able to achieve a very beautiful net profit margin at around 20% range. So the share price today is at 0.31, and recently they give up a little bit of dividends. And based on the share price at 31 cents, the PE ratios of the companies is about 23. That means assuming the earnings remain constant for the next 20-30 years, you're going to take 23 years to break even a company for buying these shares, okay? But nonetheless, the company is enjoying a very good growth ever since IPO. So there we are, okay, there we have. So from the revenue growth, okay, I just do a general forecast because, since the 2016 they only grow at 15, I'm just going to assume that the next 5 years they're going to grow at a slower rate. So I just make this reasonable estimates that 15, 14, 13% for the next 5 years. So there we have, we derived the revenue as about this amount. Okay, from there, I work out the net profit margin based on the mean, median, and max. So from then I derive based from this revenue that the max net profit margin that we're looking at for the next 5 years is between this range for these respective years. So okay, the company is presently achieving at its max. So I think the mean will not be relevant in this situation, but the max with pretty good likelihood, assuming there's no trouble for the company. So okay. Now here we go. Goes on. So with this kind of max earnings estimated in 2021, which is 4 years away, or 5. So I'm just going to derive the earnings per share. Okay, from there I just divided by the amount of shares the company have presently outstanding. Okay, so from there I work out the max EPS is about 0.024. Alright, so from then on, the earning per shares, I work out the PE ratios as based on these three: median, max, and average. So because the company is presently trading at the max range, the earnings that is max earnings net. Alright, so so I can work out that while the PE can be very attractive in several years forward. So since the company is trading presently at its PE of 23, I'm just going to assuming that the share price going to trade at the same ratios 5 years forward. So 5 years forward, okay, assumption here, okay, I made that this is going to trade on the same earnings. So if this one times 23 times, we'll work out the share price of 0.55. So nonetheless, I'm just going to work out of the based on the median and the average as well. So these are the few likely price range that we are looking at. But of course, if the stock market do rally in the next few years, we could even potentially look at a higher PE ratios as well. Okay, so of course this one is less likelihood. Nonetheless, I work out the blue boxes and the red boxes. I do see a pretty decent upside potential. Okay, apart from that, this is a very non-elastic industry because it's medical. So I see that there's pretty good upside and downside. I won't be taking this into consideration because a lot of with such good growth companies, it's unlikely that they are trading on the lower PE ratio. So I'm just going to leave it as constant 23 times. And so these are just my few estimates of what the price range going to be like. And okay, so from here I actually derive the max share price. Okay, so assuming the best condition is was 6/7 at a P of 28x times, and the worst conditions is any 32 cents, so which is pretty decent risk. So this is the median and the max, so I do believe the share price is going to trade between risk range. Anything higher is really absolutely unreasonable. Okay, so that's why I think the share price will bounce around these regions, and which is consistent with the technical charting we see over here. Okay, going forward 201819, I think the share price will really trade around these regions. Okay, but of course there's a few years wait. So in the meantime, I will just be collecting dividends. So nonetheless, here is my remarks. Okay, what I think will affect the share price. Okay, any stable revenue, that means to say if it's a 2017 or 2018 the revenue did not increase, it could represent a downside for this company. Okay, so any North Korea trigger similarly will cause a downside of this company, and any excessive dividends more than what is earnings per share can also imply the downside. But any long-term debt could imply upside because the company is not taking on any debt at the moment. Okay, it's maybe that the bank quote them a very high interest rates, which that's why they do not want to raise any debt from the bank. So, but nonetheless, any long-term debt they raise does potentially is a good information to the stocks. Okay, so to reiterate that, I'm just going to further. So the company is on its mark, okay, to achieve a 7 million net profit because for the half year they already achieved 3.6. So based on what I did do a simple forecast, okay, based on the max earnings. So yes, they are on track to achieve 7.4 for 2017. Okay, 2018 is assuming all else remain constant. The company continue enjoying good growth. We could achieve a 8.4 million profit. Okay, so as the things goes on, few years down, based on earning ratios, yes, we could really, there's really sufficient basis to see that 5 years down, we could be trading at 0.55 or 0.56. All right. So the IPO then was only 28 cents. Now it's 31 cents, just a little bit upside more. But if you're going to keep the share for a long term, I think this is pretty decent share. So, well, but now it's up to your discretion. Okay, I'm not liable for any win or profit or losses for you, but this is just my analysis. I do have a small shareholdings. I bought the shares just for some keepings, and hope to receive some dividends of about 4%. So, okay, I'm looking to receive a 4% dividends from this share as well. Okay, the main merits of this company is a good profit margin, decent revenue, and good growth here. Okay, net profits remain healthy, but of course the PE right now is a little bit high, but I expect it to, because of the growth, I expect the share price to continue to rise as well. And more so, technical, okay, is tally with what the fundamentals is reporting. So I think that's all for today. So okay, so if you do want to invest in company and you do not have any trading account, just give me a call. okay, or drop me an email. We will arrange a meetup. So this is my email, rolandpaybe@philip.com.sg. So thank you for watching my YouTube analysis videos. I need to repeat, this is not a recommendation to buy or sell. You are adults, you make condition to buy or sell. But nonetheless, I do have holdings in this company. So that's all for today. I hope you enjoy my videos. That's all. Thank you for watching. Bye bye.